Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 21st, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. We have now gotten our new FOMC key levels. Our new FOMC key levels. The Fed yesterday coming in with unchanged rates, but perhaps signaling that we may get some cuts in the interest rate later on in the year. The market responded tremendously to that right out of the gate and rallied into the close. You can see the new FOMC key level here, 52.3675. If you do need the FOMC key levels, they are posted in the description below. Very powerful move here out of that response here, and really new all-time highs, continuing to extend the uptrending structure that we've seen. One of the most bullish uptrending structures that we've seen for a good 5 months now, as this market continues to be on fire. Now, for today, we could see a little bit of a fade back into the previous session's range, back to the previous session's midpoint. Keep an eye on the previous session's high price. A failure back below 5,300, for example, could open up a little bit of a counter rotation. Even if that counter rotation heats up a little bit, a retest of the FOMC key level could be there. And that could be very much in line with the trend that we have. You know, we get to a new high and we rotate back. We get to a new high, rotate back. And it's just kind of been what this market has done. So even though we've seen a really good positive leg in the up move here, very bullish response to the Fed number here, we could easily see this thing rotate back down into the FOMC key level below. So again, keep an eye on the previous session's high price. A failure at 5,300 early in the day could lead to a little bit of a rotation back to the previous session's mid. But overall, this market still remains bullish. Even if we were to pull back like that, we could see another buy the dip opportunity as this market continues to work higher toward the 5,400 level. 5,400, the next major market structure level above. Taking a look here at the NQ. The NQ also had a very bullish response to the number yesterday. 18,272.5 is the number. Big time rally. Again, new all-time highs here, especially super late in the day. This thing just exploded to the upside. And right now, showing quite a bit of strength near the overnight highs at the moment. And again, we could be looking at a bullish session here where we kind of hang on to these gains, but if a failure at the previous session's high develops, that's where we could be looking at a little bit of a rotation back into the previous session's range. As of right now, it's hanging in there and holding above the 18,545 level. That's the previous session's high. Any failure back below that level, and you could start to work back into the range. And after such a bullish response to a key level like this, the FOMC key level, you see that very strong bullish directional conviction. At some point, you may see a strong high develop and a rotation back to retest the level. And once a retest occurs, you tend to see bulls defend it and keep it bid. So a very bullish response right now, and keeping an eye on the 18,545 level. Any failure there, and you're starting to rotate back into the previous day's range. Looking at crude oil here, crude down about a fifth of 1% right now. This one had a fairly heavy day in the previous session, couldn't really find its legs. Did respond modestly to the FOMC key level here. Did respond modestly with a little bit of a bounce. 80.95 is that level. Got a little bit of a bounce out of it into the end of the day, but really just could not lift yesterday. Today we are seeing a little bit of a failed new low develop. It's still kind of lacking energy at the moment after this big time push through 80. I've mentioned before that any pullback even into 80 could be a buying opportunity for bulls to continue to extend this move. But this market has been moving at kind of a lazy pace here, you know, one or two steps up and a big step back down, and it's had probably one of its biggest moves of the year here. 3 big rallies so far this year, but each one has come with some sort of pullback. So right now, how much more pullback do we get? Does it start to go sideways and hold up here? That's kind of how it played out this last time around when it rallied. So again, 80 is going to be the key level to continue to watch. Any failure below there and you're starting to open up a return back down towards 76. So right now bulls want to keep 80 bid for a swing continuation higher. Looking at gold, gold having a big time response here to the FOMC, to the Fed. Big time rally here. Gold really mirrored the ES, the YM, the NQ in its response to that Fed. Rallied to new highs here right in after hours trading, right at the after hours bell here. This thing opened it up big time to the upside, put in a very strong high, 22.25, and then dropped pretty hard. And ever since then, it's been kind of hanging around the midpoint of that overnight range. And this is going to be a strong high to continue to watch. If we're putting in resistance here at 22.15 or so, then we could be developing a bit of a bearish higher high failure, perhaps a bearish divergence that could lead us back the other way into 21.50, maybe even lower. If that type of move does play out, we could be looking at the development of a new expanding range up here where this thing is building some market structure up here rather than just completely exploding through the highs. So keep an eye on 22.15s here. If price can't get above that zone, back below 2200 starts to open up a little bit of a pullback into the range below. Lastly, taking a look here at the YM. YM also had a bullish response to the Fed yesterday. Big time rally, back-to-back days of strength. Right now holding in a narrow range just above the previous session's highs. And when you hold in a narrow range above the highs there's always the chance of a bull trap there, and that bull trap could lead you back down within the previous session's range, likely back to that midpoint right there. That midpoint is 39,707, and again, a little bit of a fade could be seen, even if that fade does happen, this market remains very bullish, and bulls likely to keep the FOMC key level bid for a continuation up. So this market continues to melt up a bit, but we are at kind of a cycle high, and we've seen some of these cycle highs here recently lead to pullbacks, even if this thing remains bullish overall. So keep an eye on the previous session's high price. A failure back below that high of 39,988 starts to open up a little bit of a rotation back into the previous session's range. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.